Okay, let's unpack this. For ages, the conversation around Bitcoin has primarily been about holding it, right?
Yeah, yeah.
Thinking of it as digital gold, a store of value you buy and, tuck away for the future.
Mm.
But the crypto world is all about putting assets to work. So what if you could take that passive Bitcoin and make it actively generate yield, participate in new ecosystems, essentially do things?
That's the big question a lot of innovation is trying to answer right now.
Yeah.
And the materials you've shared give us a fascinating look at one project specifically targeting this,
Wow.
BounceBit.
BounceBit.
Okay.
Okay. It's presented here as a BTC restaking chain built on a pretty intriguing concept they call the CeDeFi framework.
Hi, CeDeFi.
We've got a stack of reports and analysis. Looks like they're dated April 18th, 2024, laying out what this project is, how it aims to function, and its core mission.
And our mission, I guess, in this deep dive is to navigate these sources
Hmm.
through some of the tech jargon
Yeah, definitely need that.
and really understand how BounceBit proposes to take Bitcoin, often seen as just a hold asset, and turn it into something more dynamic, something capable of earning new kinds of yield. We're aiming for that shortcut, to being well-informed on exactly what's in these documents.
Sounds perfect. So let's jump right in. At its core, what does the source material tell us BounceBit actually is?
Okay, so the sources define BounceBit as a BTC restaking chain, built specifically around this CeFi plus DeFi framework.
CeFi plus DeFi.
Yeah. The fundamental goal stated is pretty clear. Empower Bitcoin holders to earn yield from multiple sources, going beyond just, simple price appreciation.
And the CeDeFi, that's the blend of centralized and decentralized finance elements. That sounds like trying to mix oil and water to some extent.
Exactly. It's trying to bridge those worlds. The stated aim, according to the documents, is to combine the benefits of both. So leveraging the transparency and maybe the innovation you find in DeFi
Right.
with the potentially higher yield opportunities often accessible only through established CeFi structures, the kind used by institutional players. It's an attempt to get the best of both, or at least explore that intersection.
Which ties directly into their stated mission, then, to democratize access to high-yield opportunities within the Bitcoin asset class. And the sources claim these have traditionally been locked up for the big league's quant funds, top asset management firms.
Right. And what's particularly noteworthy about their proposed approach is how they say they achieve this. The value proposition isn't about changing Bitcoin itself, not the main blockchain.
Okay, that's important.
Yeah. It's about leveraging those Bitcoin assets without altering the original Bitcoin blockchain. They apparently integrate CeFi strategies like something called funding rate arbitrage. We can maybe touch on that.
Okay.
And then create on-chain certificates for restaking and mining activity on their own chain.
Ah, so the action happens on their chain, representing off-chain stuff.
Seems like it. The idea is to enable better yield generation and new applications for Bitcoin assets off-chain, managed by specific entities, and then represent that activity on their own chain.
Okay, so the core mechanism involves taking your Bitcoin, putting it somewhere secure, generating yield using these CeFi strategies, and then using tokens and systems on the BounceBit chain to track, represent, and build on that activity. It's like a layered approach.
That seems to be the engine room of the system they describe, yeah.
Ah,
And the source goes into quite a bit of detail on the specific components that make this work.
perfect. Let's break those down then. First up, BTC restaking. How does that function in this model, according to the docs?
Okay, BTC restaking. The sources detail the infrastructure. Critically, the user funds aren't just going into like a smart contract on their own chain directly.
Right.
They're held in regulated custody solutions. The documents explicitly mention well-known custodians like Sifu, Mainnet Digital, and Fireblocks being utilized.
So unlike some DeFi protocols where assets are in decentralized vaults, here, your actual Bitcoin is sitting with regulated financial institutions. That's a significant design choice.
It absolutely is. It signals a different trust model, doesn't it? While the assets are held in this regulated custody, they are used to generate interest, specifically through arbitrage strategies managed by experienced asset management entities.
Ah, okay.
This is where the CeFi yield generation happens.
Got it. So you deposit BTC into regulated custody. It generates yield via arbitrage. But what does the user get back immediately on the BounceBit side?
You receive a pegged version of your deposited BTC called BounceBTC, or BBTC.
BBTC, okay.
This BBTC acts as your representation of the underlying BTC in custody, plus its yield-generating potential, presumably.
Right.
You can then delegate this BBTC, or a native BOB token, we'll get to that, to node operators on the BounceBit chain.
Delegation,
Oh.
leading to staking rewards, like on other POS chains.
Precisely. And this is where the liquid staking derivative, LSD aspect, comes in. When you delegate, you get an LST voucher back called STBTC.
STBTC.
Yeah. Think of it as a receipt for your delegated stake that remains liquid. You can potentially trade it or use it elsewhere.
And this STBTC receipt isn't just a passive token either, according to the source. It's the key to the restaking part.
Yes, that seems to be the second layer. This STBTC can then potentially be restaked to other shared security clients, or SSCs.
SSCs, what are those?
The sources give examples like sidechains, bridges, and oracles. The idea is that the security derived from your underlying staked assets, represented by STBTC, can be extended to help secure these other services, potentially earning you additional rewards. So you're staking on the BounceBit chain, and then potentially restaking that staked position, that STBTC, to secure other things.
Okay, let me see if I've got this flow right. BTC goes into regulated custody. You get BBTC back, representing that custodied BTC plus its yield potential.
Right.
You delegate BBTC, or maybe their native token BB. Correct.
You get STBTC back, which is your liquid staking receipt.
Yep.
And then you can restake that STBTC to secure other protocols, these SSCs. It's definitely layering yield and utility on top of the original asset sitting in custody.
That's the picture painted in the sources, yeah.
You mentioned the native BBB Balto token being usable for delegation, too. Tell us about their consensus mechanism. It sounds a bit different.
They employ what they call a dual-token PA mechanism. Proof of stake, but dual token.
Okay.
It's a hybrid system where validators can accept both the BBTC token we just discussed, the Bitcoin representation, and their native BBB tokens for staking.
Why use two tokens for staking? What's the angle there? Seems more complicated.
Well, the source suggests it broadens the base of participants who can secure the network. You don't only need their native token, you can use your yield-bearing BTC representation too.
Ah, okay. More paths to participate.
Right. They also state it adds an extra layer of network resilience and security by diversifying the staking base. That's the claim anyway. Interesting. Another key feature mentioned is liquid custody. We touched on custody with BBTC, but what does this concept specifically entail? Is it different?
Yeah, it seems related but distinct.
Yeah.
This is about keeping the assets liquid even while they are held in custody and earning yield off-chain.
Okay. How?
When you deposit assets into their system, and this might apply more broadly than just Bitcoin, you receive a liquid custody token, or LCT.
So the LCT is different from BBTC.
BBTC seems specifically for Bitcoin deposits resulting in the pegged token. LCT, based on the description, appears to be a more general term representing any asset held in regulated custody on a 1.1 basis.
Okay.
These LCTs can then be bridged to the BounceBit chain. It basically maintains your access to the value of your assets while they're working off-chain in custody.
So it's like a claim check you can use on-chain.
Exactly, a liquid claim check. The sources also point to an option for users to participate directly in these CeFi strategies, specifically delta-neutral funding rate arbitrage.
Whoa, okay, funding rate arbitrage, that sounds complex.
It is. It's facilitated via off-exchange settlement solutions, and they mention Sifu's MirrorX specifically. Basically, it refers to specific ways institutional firms trade derivatives without assets leaving custody, trying to capture yield from tiny price discrepancies between spot and futures markets.
Right, definitely an institutional strategy.
Yeah. The key takeaway seems to be they aim to connect the user, via these LC2s or other mechanisms, to these complex institutional yield strategies happening off-chain.
So the LCT is your liquid claim check on assets sitting securely in a vault, which you can then use on-chain, potentially while those assets are also generating yield off-chain via complex trading. That makes the liquidity piece clearer. Okay, finally on features, what's Bounce Club? Sounds a bit different.
Bounce Club is described in the sources as an on-chain space. The vision presented is to create an environment where users can build DeFi experiences, think applications, or communities, without needing deep coding knowledge. Apparently using pre-built widgets available via an App Store model on their chain.
Ah, like a low-code or no-code platform for DeFi on their chain?
It sounds something like that, yeah. They're a user-facing platform for building utility on top of the core infrastructure we've been discussing.
Okay, that's a lot of moving technical parts. Custody, arbitrage, BBTC, STBTC, LCTs, dual staking. What powers the whole ecosystem? The native token, BBLers. Let's talk about that.
Right, the BBBO token. It's the core utility and governance token for the BounceBit chain. Its total and maximum supply is capped at 2.1 billion tokens.
2.1 billion. Okay.
And according to the sources upon listing, the initial circulating supply is said to be 409.5 million, which is about 19.5% of that total supply.
And what are the primary roles this token plays within the ecosystem? What does it do?
The source lists several key functions for BBLers. Pretty standard for a layer 1 or core protocol token, but let's run through them.
Okay.
First, staking. Just like BBTC, you can stake BBVia ballers to help secure the network via their dual-token PoS mechanism.
Makes sense.
Second, protocol incentive. BBDL tokens are paid out as staking rewards to validators, incentivizing network security.
Got it. Rewards.
Third, gas. You need BLA ballers to pay for transaction fees and execute smart contracts on the BounceBit chain. Standard gas token function.
Yep.
Fourth, governance. Holding and staking BLA baller grants you the right to participate in on-chain voting for protocol upgrades and parameters.
Right, have me say.
And finally, currency. It's intended for use as a medium of exchange and store value within the various applications and infrastructure built on the platform itself.
Okay, so it covers the standard basis for a chain's native token security, payments, governance, and general utility within its own ecosystem. And looking at the allocation breakdown in the source, the largest chunk is earmarked for staking rewards.
Yes, that seems right. The largest allocations mentioned are staking rewards and delegation program at 35%. That makes sense for incentivizing a new POS chain.
Yeah.
Followed by investors at 21%, then Bounce Club and Ecosystem Reserve at 14%, and the team allocation is listed at 10%. And there's also the Binance Megadrop allocation mentioned at 8%.
Okay. Let's look at their trajectory then. What did the sources highlight about their progress so far and what's on the horizon, roadmap-wise?
They list some pretty rapid growth numbers for Q1 and early Q2 of 2024, apparently correlating with early program launches, reaching $100 million in total value locked, or TVL, in just a week.
Wow. Okay.
$300 million in 2 weeks, and $500 million in a month after launching something called their Premium Yield Program event. Those are significant metrics they emphasize.
That definitely suggests a lot of early interest in this yield model they're offering.
Seems so. They also highlight the testnet launch back in March 2024 and acquiring 100,000 early access users in 2 months during Q2.
So what's the plan moving forward based on the roadmap provided?
The immediate focus listed for Q2 2024 is the mainnet launch itself and building out the core ecosystem.
Okay, getting the main network live.
Yeah. Looking into Q3 2024, the roadmap includes introducing more complex CeDeFi products, specifically listing options, structured products, and lending and borrowing functionalities.
Expanding the financial toolkit on the platform.
Exactly. Q4 2024 is centered on developing the core BounceBit restaking platform further. And looking further out into Q1 2025, the focus shifts to building out that shared security clients, SOC's ecosystem we discussed earlier.
Right, onboarding other projects.
Onboarding protocols that want to leverage BounceBit's stake security.
And underpinning some of this, especially the CeFi side, are the mentioned partnerships, Sifu, Mainnet Digital.
Right. They list commercial partnerships with Sifu and Mainnet Digital, which seems to directly relate to the regulated custody and off-exchange settlement infrastructure needed for those arbitrage strategies.
Social pieces.
Yeah. And they also mention Antalpha, described as a Bitmain asset management platform. These connections appear pretty crucial for enabling the institutional-grade yield generation strategies they plan to utilize.
Okay, we've navigated the architecture, the token, the history, and the future plans according to these documents. Let's bring this back home. Why should someone listening, someone who holds Bitcoin or is just tracking the crypto space, care about a project like BounceBit? What's the big picture implication here?
Well, I think it raises a fascinating set of questions about the evolving role of Bitcoin, doesn't it? If it can be leveraged securely through regulated entities, as they propose to generate yield via established financial strategies like arbitrage,
Right.
and then represent that yield potential and underlying asset position on a new chain with DeFi components like restaking.
Right.
What did that actually mean?
What does that mean for Bitcoin's perception and utility? It's traditionally just the store of value, not the yield-bearing asset.
Exactly. The potential, as pitched in these sources anyway, is about fundamentally unlocking Bitcoin's capital efficiency. It's moving beyond just HO dealing to enabling active participation in yield generation, using this unique blend of regulated CeFi operations and their own DeFi structure. It's an attempt to put that massive, currently sort of dormant Bitcoin capital pool to work in new ways, trying to capture the benefits of CeFi yields while layering on DeFi composability via restaking.
So summing it up based on the material, BounceBit is presenting itself as a key piece in this movement to make Bitcoin an actively earning asset.
That seems to be the positioning.
It does this through its distinctive CeDeFi approach, combining regulated CeFi custody and yield strategies like arbitrage with DeFi components like restaking and liquid staking, all built on its own dual token chain.
And the core mechanism highlighted is utilizing Bitcoin assets off-chain via regulated entities to generate yield, and then using their own chain and tokens to manage restaking, provide liquidity representation, and build applications on top.
Yeah.
It's a very deliberate architectural choice, it seems, to bridge the institutional and decentralized worlds specifically for Bitcoin yield generation.
It's a really interesting model, one that explicitly embraces regulated centralized elements for core functions like custody and yield generation, while building these decentralized layers like restaking on top. It definitely makes you think. As projects like BounceBit forge these new paths to make massive, historically passive assets like Bitcoin active,
Hmm.
what are the inherent trade-offs? Trade-offs in leaning on centralized, regulated custody and asset managers for the foundation of a yield-generating system built around a fundamentally decentralized asset like Bitcoin.
That's a key question. And furthermore, how might the potential success or failure of these kinds of CeDeFi hybrid models influence how we think about trust, yield, and, well, the future relationship between traditional finance institutions and decentralized protocols in the broader crypto landscape? Especially for Bitcoin, it's definitely a space worth watching closely.